So lots to unpack since the Fed minutes were released. We all know that there's going to be a more aggressive plan now with monetary policy. They're talking several rate hikes to the federal funds rate. We're talking about releasing some of our balance sheets with bonds and mortgage-backed securities. And everyone is talking about what this is going to do to housing, coupled with the fact that Freddie Mac interest rate survey is now reporting interest rates in the 5%. Now, we all know that that's a lagging measure, but I will tell you that from anecdotal experience, I would not be super shocked if that was in the realm of rates that you're being quoted. Now, I imagine that you're going to start seeing all kinds of headlines talking about affordability and the shift in housing and what this is going to do to homeowners and home values. And so I wanted to address that in today's video. I want to talk about the real challenge with affordability, my predictions for housing, and then I want to give you guys some tips if you find yourself in a position where you're unable to buy at this moment. Before I get into all of it though, I am going to ask you to like, comment, and subscribe, and maybe share this video with a friend or family member who could use this great information. I want to start this video off with just kind of talking again about the data and what it really means now that we're seeing such historic interest rates and now we're seeing all of this rapid monetary change. And I want to reference an article that actually came out today, and it was by Diana Olick from CNBC, and it was talking about how Redfin was reporting that 12% of homes had a price drop. And you know what's interesting about that is that people will then see, oh my gosh, 12% of all homes had a price drop. But when you compare this number with what was being reported last year, and last year was, guys, one of the hottest years in historic history for real estate, 9% of all listings had a price drop. And so what I'm seeing here isn't that I don't believe that, you know, the competitiveness of the market is going to, you know, simmer down. And I do think that some of that frothiness is going to go away. But I am saying that it isn't as, oh my God, catastrophic as this would imply. The other thing that came out, just so that you know, is that we have 8% additional listings in the market, which I do think is also a very positive sign of, again, a shifting market. We have historically low inventory and will for some time. And I do want to reference this because I did some research on this back a couple of months ago when I was comparing what happened, you know, back in 2005 with what happened with the Great Recession to what's happening today. And what's interesting to note is that when a market shifts, like I do believe this one is shifting, it takes a long time for us to actually realize that the shift has occurred and then for us to feel any kind of momentum or any significant changes to our daily lives. And so just so you guys know that the shifting market for the Great Recession actually started after the second quarter of the year. And then we really saw a notable change in 2005, but we weren't talking about the market collapsing until 2007. And so it does take a long time. And I am not saying that the market is going to collapse. I honestly think that it couldn't be farther from the truth. We have different types of issues, and we have a really low amount of properties. Yes, there's a lot of inventory that's been taken up by investors, but generally speaking, the majority of the homes that are owned today are occupied. Not to mention, we have really good loans with people that can pay them, and we don't have anything impacting employment. And so because of those things, right, I just don't see like a reason that we would then have values collapse. And I just want to remind you that I am an older millennial, and my entire life, my parents and my grandparents talked about the effects of the Great Depression. I personally believe that, you know, the Gen X's, the millennials, and the Gen Z's will be talking about the Great Recession because it's what we experienced and saw our parents experience. And I think that the Great Recession was nothing like the Great Depression. And I think that whatever will correct the economy in a new way, in a significantly profound way, will be completely different than the Great Recession as well. And so I don't, blame you for having big fears of, home values dropping. I just, as a professional that's looking at the market, I just don't see that happening. So the next headline, or the big question that I really want to tackle, is this question of affordability, right? I've been hearing so many people say with rising interest rates, people won't be able to afford housing. And I think the thing is, it's not that there aren't enough people to afford the houses that are available. In fact, we've looked at the data and there is a plethora of people that are still able to afford housing. It's that there isn't enough affordable housing for people who make under the median income. And so, it is a real issue. And I do think that the HFHA, God, I can never say that, or FHFA, the FHFA, geez, gosh, they're going to definitely have to concentrate on how to resolve that problem. But unfortunately, this is a type of market that does price out some consumers from the ability to purchase. But I did want to also just kind of clear up maybe some misinformation on this topic, because Black Knight actually just came, and Black Knight, guys, is like the be-all end-all as it comes to statistics in the real estate space. But they actually did some charts based on markets with the highest growth rates. Just so you know, Arizona came in at number 4 at 32%. In case you were curious, Tampa, Florida is at 33%, Austin 33%, Raleigh, North Carolina 32%. So lots of really hot markets. Everybody that made the top 10 list was close to 30% appreciation. San Diego market was at 27%, right? So just really high growth rates. Now, conversely, right, the lowest growth rates in America, right, Minneapolis, Minnesota still saw a 10% increase in home values. So now that we've done the range, right, we've seen the highest to the lowest in home valuations, I wanted to talk about what it actually looks like, how much it impacts affordability to go from, let's say, a 4.5% interest rate to a 5.5% interest rate. And interestingly enough, guys, because of how much wages have also increased, just so you guys know, people are still able to afford these homes. In fact, even at 5%, right, the payment to income ratio increases from 29.1 at 4.5% to 31.2 at 5%. And so we're not seeing these dramatic changes in people's ability to afford a house so much as the news would maybe have you believe. Now, I'm not saying that there won't be any more pressure to that as home values increase. So I do think that we are now seeing a shifting market where we will start seeing more and more inventory. And I do think that these competitive bidding wars where people are overpaying for properties, I think that we're going to start seeing them go away, right? So it will transform over time, but we still have got some months ahead of us. So just to drive in this point, guys, we're sitting, at least in the Phoenix area, somewhere around 5,000 homes available. A balanced market is somewhere between 16 to 24,000. So we have a ton of time left before we're actually going to be in a balanced market, but we're heading in the right direction. And like I said, guys, a balanced market just means more favorable negotiation terms for buyers. It does not mean that home values are collapsing. So what to do if you find yourself in a position where it no longer feels like it makes sense to purchase? Well, I want you to look at a couple of things, right? So whenever you're deciding to make a real estate purchase, one, I want you to make that decision with an actual need in mind, right? So there has to be a real need in housing. So one of the biggest mistakes I personally ever made when I was, 23 years old was buy a house in the frenzy thinking I was never going to be able to afford to buy a house in Phoenix. And guys, it was a terrible time. I didn't make enough money. I was counting on, the assistance of a family member. And I had all of the wrong strategies. I did a 2-year ARM. Guys, if you could make more mortgage mistakes than I made in that purchase, I don't know of how many more you could have made, right? And so I didn't have a real estate need. Like, I didn't need to buy a house. I was perfectly fine in an apartment. And in fact, in that moment in time, renting made more sense because it was half the cost. Now, if you have a real need and renting is going to be super expensive and it looks like it's also increasing at double digits, does it make sense to wait? I don't know, right? You really have to match apples for apples. It's like, what are you going to be giving up? But if you don't have a real need to purchase, it might make more sense to live with a family member or rent for a short period of time. Now, the other thing that I want to remind you, and it's something that I wish somebody had told me, is that it doesn't mean like not being a homeowner does not mean that you can't be smart with your money. You can do so many other things like get out of debt, save a large down payment, max out your 401k, invest in stocks, right? Do something with your money, become better financially. So that way in the future, homeownership looks completely different. Now, fast forward, a decade, right? I made more money, had more money in the bank. I was in a completely different position in debt, right? And the market shifted and I was able to purchase something that made way more sense. And so there will be a time or an investment for you, but if you do not or are unable to purchase right now this second, do other things with your money. Okay, this isn't it's screwed, I'm just gonna pay high rent and just spend it all. Like that's a terrible plan, right? But look at what else your money can be doing for you. And we're gonna be talking about that a lot more on this channel, right? Because I do think that we are going to see some challenging economic times, at least in the future. And we should be talking about how to be practical with our money so that we can make overall smart investment choices. So I'm going to be talking about this topic and more on this week's live. I'm actually also going to be doing a video on amortizations, and so that will be really interesting for you guys to check out, let me tell you. But if you have any questions, any topics that you'd like to approach, then please don't hesitate to leave the comments below and join us at 6 p.m. on Wednesdays. All right, guys, until next time, I'll see you soon.